Hello and welcome to Forex Brokering's update on selected markets. It's the last day of July, Friday 31st. Despite Fed's remark on continued growth in unemployment in US, it remains unclear when the Fed is likely to hike the interest rate. This does not come as a big surprise to investors, and Wednesday's meeting was the 54th without rate hike. Fed wants to see further improvement in the labor market as well as higher inflation, and thus will get additional information from July's and August readings before the September meeting. Across the Atlantic, Euro area annual inflation is in line with analysts' expectations at 0.2% and unemployment rate remains at 11.1%. Let's go straight into charts and start with EURUSD. Euro remains heavily supported at around 1.09, the 61.8% FIBO retracement from the low of last week at around 1.08 and this week's high at 1.1120. Such technical setup suggests another wave up towards 1.12, 1.1220, but first, an intraday resistance at 1.11 needs to be broken by buyers. There are not many economic events scheduled for next week for the Eurozone, and thus US data will have the most impact on any movements, with non-farm payroll data is due next Friday. That solid bullish candle on US Open today may attract a lot of buyers to the market and thus moving the market to the upside on EURUSD. Our view remains bullish for USD and we see intraday dips on EURUSD to provide good opportunities to buy. Pound too remains supported by the market, and similarly to EURUSD, GBPUSD finds an intraday support at 61.8% FIBO retracement, which can potentially lead to another wave up. We revised the target for the breakout on the upside to 1.5900 from 1.5800 for the next week, with support at 1.5450. There will be a lot of interest and volatility on the British currency, as next week on Thursday the Bank of England will release its quarterly inflation report as well as interest rate decision, but prior to that we have a release of UK's trade balance. Canadian dollar currently traded at 6-year high versus the US dollar over the last 2 weeks of trade shows a good short opportunities, with next targets around 1.2820. The trouble the Canadian dollar faces is the lowering price of oil, which seems to be dragging the loonie down. With little to suggest a reversal in price of oil, US data next week will have a huge impact on USD CAD, but taking into consideration other major currencies somehow finding support via the US dollar, we may see USD CAD testing its support levels. That's all from us for today here at Forex Brokering. Thank you for watching, don't forget to use stop losses and have a great weekend.